Hello, this is Steve Malone with CompositeX. I hope you're doing well today and you get some good trades. You know, trading is a pretty simple thing to do. You click to go long or you click to go short. Looking for that market to either move up or the market to move down. But what if it doesn't do that? What if it just sits there? A decision eventually has to be made. Certain things have to line up to where it's got to move, it seems like. In these dog days of summer, we find some of the currency pairs in ranges. Well, we're coming to a decision point on the pound dollar. And so today I want to focus my attention on there's a certain point that the pound dollar has either got to make a move up or it's got to make a move down. We've seen a sideways action in the pound since the 1st of July. So in today's video I want to point out some potential reasons to see it go up and the potential reasoning starting to surface to see it go back down. Now, take a look at this. You can see that since about March of last year, we've had this pretty good move up. As a matter of fact, from low to high, it's moved up about 700 and something pips. And this has been reflected in some other pound currencies, like the pound Swiss currency pair. Now, it's made a tremendous move from March of last year of about 870 pips or so. However, some of the commodity-based pairs, like the pound Aussie, now it had moved down to a low point, but you can see here it has been bouncing up and down in basically about a 500 pip range. The pound CAD, another commodity based currency pair, it too bouncing back and forth and showing some potential to the downside. You see the price action to the downside, the Traders Dynamic Index to the downside, it too in about a 500 pip range. And then we look even at the pound Kiwi. Now again, the Kiwi dollar being a commodity-based pair, it just goes to show you that the range that we've been since March of last year. And this range being about 450 to 500 pips as well, suggesting some downward movement. Every time we get down a little bit low, we get a bounce back up. So considering the pound dollar, going back to that, we've seen it make a push up from the last swing high to the swing low. It's made a decent push to the upside and it's caught itself in this little extension level between 127.2 sitting about the 70.80 area up to the 618 sitting right about that 71.80 level. And that's the key point. And this is where the decision is going to come in. We can't just sit here in this little range of about 100 pips continually. We're going to have to see a break of this. And to show this a little bit more clearly, if you go to the pound dollar on a 4-hour chart, you can see what I'm talking about. Since July the 1st, we got into this little territory here and we've been sideways. As a matter of fact, if you consider for the moment that we have this low point one time at 70.85, the majority of the time we've been at around 71 on the low. And then we had this one period of time up around 71.80. As a matter of fact, you can see here that really the average high puts us somewhere in the ballpark of probably right around 65 or so. So we're in this 65 pip range and we're pretty much adrift. And the decision has to be made. As a matter of fact, Credit Suisse today and Bank of America and some others have made some reports or comments about the pound dollar. Now some were expecting to see that after such a big move up that it's had, that we'll see it slide back down to this level. A pretty good move up and at least come back down towards about the 70.50 area. It hasn't done that. It's just been sitting sideways. So one of the things that folks are looking at for a potential downward play is the fact that we've made such a big move with no major retracements. If you consider for a moment that we have this move right, let me do it here, let me take it from this direction, I'll move this around, but from that high to the low that we had back here, the retracement that we had was only about a 23.6 retracement. That's a sign of continuation, and the market did move up. Now that we've moved up that far, and this distance up is pretty well equal to the distance that we've seen back here, the suggestion is we get a move back down. And so traders are looking for a break of this area right here. Now in this area, the 70.85 to the 7100 area, this is an area of potential weakness to see if it actually pushes through. And we're going to find bids in the market to bid it back up. At the same time, we break below this 70.80, we're going to find ourselves with sell stops wanting to see this fall back down and get back down in that territory closer to about that 70-60, possibly down even to 69.80, 69.75 area. Now, considering the pound bulls, what are they looking at? Well, they're looking at the monthly. And if you look at this monthly, we had this high at around 211 back in November 2007, and then right around January 2009, we got down to 1.35. Now, the 50% of those sits right there at 173.30 area, and right now we're within 200 pips of that. So the institutional traders are thinking, okay, we gave it a chance for it to fall back over, and we spent 2 weeks without making a move lower, and it's had some opportunities to go lower. Well, we sit here, nothing. And institutions can't make any money if it's doing nothing. So my thinking is, if we have the potential for the dollar to get stronger next week, because the bonds have moved way down low to about 2.5%. The lowest we've had for 2014 is 2.4%. So we've seen a swing low in the dollar. I think there'll be a push back up, especially if we have better than expected economic data for the U.S. next week. We could potentially see that pound dollar break through this area and push down. Now, those institutions holding longs in the pound, well, they're going to want to see a grind higher and break the 71.80. Now, an institutional grind higher, what I mean by that is they just put more in and put more in, buy more, buy more, buy more, till it actually gets to the point of reaching buy stops. And when those buy stops get triggered in the marketplace, then all bets are off going short and we push higher. So where are those buy stops right now? Those buy stops are sitting up there around 71.80 to 172. A break of 172, then we see it push on up, and there's no resistance until we get to that 50% level, sitting right around 173. So at this point, my take on it is watch the pound. Look for either the pound to break below 70.80, 70.85 area and trigger sell stops. Now just be aware, if it does that, you got to be aware that we are in a bull channel, and you can get caught in what's called a bull trap. This is a bull channel. We have this upward move here, supported by the lows down below here. Okay. Now what could potentially happen is the market comes back down and breaks this, and you think, okay, here we go, we're going short, and then it pushes right back up, and that's a bull trap. So you got to be aware of that. So if it breaks below the 70.80 area, just be aware that we may get a bounce back up. It may be a fake move down. Collect those shorts in the marketplace, get them going, turn it back around, knock them out, collect their stop loss orders on the shorts, and then go in long and break above the 71.80 area. So right now, that's my thoughts going into the end of the week watching the pound. I expect the pound to make a move. If the pound continues being flat, range bound going into the end of the week, then it's going to find itself at the mercy of the US dollar next week, and I don't know if institutions really want to see that happen or not. So what we may have happen either overnight going into Friday is a situation where we may get sovereign buying in on the pound dollar to push it to break the 71.80, or fall back over and get back down into this area and attempt to go down to the 70.50 area and tease the shorts in the marketplace. I think if we get a break of 70.50, that'll be the key level, or 70.60 area will be the key level for the shorts to really step in the market and see it slide back down towards that 169, 170 level. But if it doesn't do that, if it goes on up and we get that institutional grind higher to 71.80, breaking 72, then it's 173.30 in the cards, especially from the point of the institutions. Well, this is Dean Malone with Compass FX. Hope some of the information here will help you out. Either look for the short here below 70.80, or look for the long on a break of 71.80 to the upside. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.